Smart 24, driving business.
Most welcome back to the show. This is Financial Markets, and my name is Anthony, together with
Gloria Christine.
And we are, of course, a team bringing you the latest and, of course, most informative insights into the financial markets within East Africa and the globe as well. The show is proudly brought to you by Altex East Africa. Altex East Africa is saying you can do something new. Simply grab your phone and dial *292# to experience Altex at a whole new level. With Altex East Africa, everything is possible, and we are saying no hassle, and of course, my money, my future, under Zabu, with of course access to now the treasury bond market and affordability. At just 15,000 Ugandan shillings, you can start your journey of trading and investment within the East African treasury bond market. Altex opens their doors at exactly 8 a.m. and closes at 15 minutes past 3 p.m. East African Standard Time. Altex East Africa, you can do something new. Now, of course, let's get to Nairobi straight up and have a look at the performance of the stocks here in Nairobi. Looking at the average performance, Gloria, we had 42 listings participate, like you said, in trade. And the day ended with 28 gainers and close to 9 losers. A pretty interesting performance. When you look at the improvement in the volume, it was over 196%, comparing, of course, Tuesday with Monday. And we had about 159% improvement in the volume as well. A pretty much better day of trading on Nairobi Securities Exchange, comparing, of course, with Monday, right, Gloria?
Yeah.
And then what are some of the biggest gainers? Once again, if you could recap for us, Gloria.
Our biggest gainers was Sanlam Kenya, which had which led the gainers with 9.67 share price appreciation, closing at Kenyan shillings 7.92 per share, followed by Everyday East Africa with an appreciation of 8.89%.
Let's look at some. For example, Sanlam. For our viewers who might not know, Sanlam is a company that is engaged in insurance. Mainly, their product is insurance, and the principal activity of the company through its subsidiary body, Pan Africa Life Assurance Limited, is the underwriting of all classes of long-term business, insurance business, and of course, with exception for industrial life insurance. The group has also interest in wholly owned investments or investment companies, or PA Securities Limited companies. The company's business segments include ordinary life assurance businesses, superannuation, as well as investment businesses within Kenya. And of course, they have a subsidiary also here in Uganda. Yes, we can continue, Gloria.
All right, then we also had Free Tree Group Holdings,
yes,
which had an appreciation of 8.33%. Then we also had Summer Africa, which came out last in the end of the day with a depreciation of 7.04%.
Yeah, Summer Africa, it has been a stock that, you know, in Kenya we have quite a number of stocks because the market has grown over the years, and you have, for example, the growth enterprise market segment, which has a lot of stocks in there, including Samia Africa. Now, Samia Africa is a company principally engaged in the manufacture, importation, and sale of tires. Of course, leading also to, of course, opening up branches across the East African region. They deal in tires for cars, for motorcycles, and motorbikes. And the company's products range from passenger, textile, and also seat-belted radios, 4x4 tires, light truck radios, and bias. Different products ranging from, of course, what can fit cars and what can fit motorbikes. They have just a small market capitalization, at least about 699 million Kenyan shillings, and they are listed on the growth enterprise market segment. Yesterday, they lost some bit of value and closed off at 2.51 Kenyan shillings. Moving on, Gloria.
All right. Then regarding the performance of the Nairobi Securities Exchange market indices, the benchmark of all the share index climbed up to 0.43, which is 0.4% points to close at 108.22, representing a weak gain of 0.94%.
Yeah, that shows that's a good picture. It means the markets have generally improved in Nairobi. Recently, we've been very worried about the depreciation of the Kenyan shillings. It has been something that has kept investors on their toes. But market performance in the recent few weeks shows a slight improvement given the benchmark index performance. Now weekly gains of 0.94% have been registered and 4-week gains of 2.01%. Quite very interesting performance. Other remarkable indices like the NSE20 have appreciated by 0.41%, whereas the NSE25 has also appreciated by 0.49% on the Uganda Securities, Nairobi Securities Exchange. Let's look at Safaricom, Gloria. How has Safaricom performed in the recent few weeks? Remember, Safaricom is the only telecommunications company, if I'm not mistaken, on Nairobi Securities Exchange. It's engaged in provision of data, SMS, voice bundles, the internet. The company also offers a range of products, including mobile handsets, the mobile broadband modems, routers. It has also tablets, notebooks, and laptop computers. And the company has also opened up a very strong branch in Ethiopia, where they are, of course, competing with the likes of Ethiopia telecommunication companies, a couple of them in there that have already been in the space, and they're doing quite well. Now, on Nairobi Stock Exchange, they represent the #1 most valuable stock on the exchange, with a market capitalization of 713 billion Ugandan shillings, which represents about 42.2% of the entire market in Nairobi Securities Exchange. Earlier this year, their value was way more than that, where they wiped out almost 50% or 52% of the entire equity market in Nairobi. But their recent performance has been quite questionable. Gloria, what has been the weekly, monthly, and quarterly performance of Safaricom?
For Safaricom, the weekly performance there has been an appreciation of 1.71%. Then for their weekly performance, there was an appreciation of 5.0%, 0.1% actually, yeah.
Wow, that's interesting. You have the stock at least improving in the weekly performance and the monthly performance as well. How about in the last 3 months? How has the performance actually been able to fare?
In the last 3 months, there was a depreciation of 1.11%.
1.11%.
Yeah.
However, of course, Safaricom maintains the #1 position in terms of trade, right? And in the past 3 months, they have recorded at least 457 million shares on the market in about 19,431 deals at a total value of 7.28 billion Kenyan shillings on the Nairobi Stock Exchange, meaning they're getting back to their feet. And this is something we can, of course, have a hope stand on, that Safaricom is still that stock that we can still actually count on the Nairobi Securities Exchange. We had other participants in trade, including the KCB Group. KCB Group had a volume of 1.56 million shares that were traded. Yes, KCB Group is one of those very great financial institutions in Kenya as well. The bank has subsidiaries within East Africa, in Uganda here, in Tanzania as well. And when you look at KCB's performance also, KCB Group is a Kenyan bank that also provides corporate, retail banking services, and it offers various personal banking products and services such as savings and, of course, current accounts, personal loans, easy pay loans, salary advances, and a couple of other credit facilities. Now, KCB Group's current performance is standing at an appreciation of 0.05 appreciation, 0.05 Kenyan shillings, after closing off the day at 29.50 Kenyan shillings. The performance of the stock has been, of course, not so good in the longer run. In the longer run, KCB, for example, in 4-week performances has dropped at least 7.68%. And in the last 3 months, over 15.9% has been dropped off the current market price. And when you look at the last 6-month performance, over 22.7% has been dropped off at KCB Group. KCB is currently the 5th most traded on stock on Nairobi Stock Exchange, and in the past 3 months has recorded a volume of 36.4 million. And that's it, my friend, from Nairobi Stock Exchange. You can find more of this on our website at www.smart24tv now, and you can also follow us on Twitter at Smart24TV now for more of that information. But let's first get to cross over to the United States. We want to give you a look at some of the biggest, not the biggest, the 7 cheap but growing stocks. We want to look at some of the 7 cheap but growing stocks in the United States market. You know, when you want to trade and you know you want to diversify your portfolio, one of the things is to invest across borders. When you invest across borders, you try to test the waters. You try to alleviate the risk. You know, Gloria, when you put all your eggs in one basket, if you ever drop that basket, you lose all your eggs. But if at all you diversify your portfolio, you are at a lesser likelihood of actually falling into the risk that is involved in the financial markets. Let's talk about the top 7 stocks, rather growth stocks on Wall Street that are cheap. And Gloria, you can give me the first one there.
Well, currently we have ChargePoint. Yeah, ChargePoint is one of the stocks among the cheap growth ideas right now. So ChargePoint is one of the world's largest electric vehicle charging solution providers. Yes, and right now the stock is down around 81% from its peak. But the business hasn't stopped its momentum, and their secular tailwinds in the EV industry have driven consequently high sales growth, nearly reaching 60% in the April quarter. Yeah. Yes, that's about it.
Well, and they have over 300,000 charging locations in over 31 countries. The electric vehicle manufacturing industry has been growing in the United States, and we are now seeing ChargePoint come up. But Tesla, for example, has been around for some time. Comparing these two, as more electric vehicles hit the road, are we expecting more performance, much better performance from, for example, ChargePoint?
From ChargePoint.
Yes.
From now, as the electric vehicles hit the road, the demand for charging infrastructure will increase even more. So the total addressable market could even reach $417.
Billion dollars.
Billion by 2030.
Wow, that's almost 900 times its current value. Currently, I've always wanted Tesla because Tesla doesn't issue dividends. But the way people are so interested in the stock, it gives you this picture that people love the business. People love what the business is doing, and that's exactly what I think some of our companies in Uganda should also borrow. That even when you don't issue dividends, what are you giving to society?
Exactly.
Right? What are you giving to society? So electric vehicles have become some of the most user-friendly, environment-friendly, and of course some of the most cheap and affordable vehicles, because you don't have to, at the end of the day, to buy gasoline every single day. You just simply get to charge your car and you get on the road. There was another stock called BAC. More than 48 million American households now have dogs, and at BAC is a well-positioned capitalized company on the market. And while many might compare BAC to pets.com, I would urge times that these two companies are very different. People go online for different things, especially the younger generation, and the trend is only accelerating. Now, initially, the company had explosive growth with pandemic's tailwinds, and this drove up the valuation to over 1.8 billion US dollars at its peak. The growth, however, was cooled down substantially since then, and BAC sits on now a valuation of about 92% lower, with revenue estimated to stay essentially very flat from the company's financial year 2022-20 to 2024. But as we advance, the sales are projected to pick up in the financial year 2025 to at least over 9.45% year-over-year growth, and accelerate more to about 13.4% growth in the financial year 2026. That should cause substantial appreciation, since the price to sell ratio here sits at about 0.44 times currently. That's another company that is surprisingly very promising stock back. They look at dogs, and it's interesting how a company that deals with dogs could be amongst the growth stocks. But accordingly, analysts also have a consensus price target of about $3.25, implying about 135% upside.
All right, so another company we could look at carparts.com. You could refer it to as PRTS. So this is another battered down growth stock with explosive growth during the pandemic. And it's no longer as speedy, but that doesn't mean it can no longer deliver as particular growth. Yeah, so this growth slowdown won't last forever, of course. So revenue growth is projected to reach 12% in 2025. Yeah, so here, the average US car has shot past 13 years of age and likely over 14 years old by the time of writing. So not many people can afford a new vehicle in this environment, let alone insurance hikes. So the hijackings and breakdowns and rising due to law enforcement and many parts of the country contributing to carparts.com is bull case. Thus, there has been a constant increase in car part sales.
So that's a projection that probably this is also a very promising and potential stock. Carparts.com, dealing in, of course, the repair and fixing of cars. Another company here is Match Group. Match Group is an undisputed leader in online dating. Yes, an online dating company with a portfolio of popular brands including Tinder, Hinge, OkCupid, the Plenty of Fish, and quite a number of other dating companies. The company has over 15.9 million paying subscribers on its platform, and benefits from the network effects, and of course take data advantages of its size and reach. However, Match Group has been under pressure recently due to the concerns over falling user growth, which declined by 3% year over year, and increased competition. It even faces geopolitical headwinds, as the company, of course, had to pull out of Russia just of recent. And when you look at the current Match Group performance, it has a dominant position in the market, which is estimated at 60% share in North America. And I believe, of course, sales can rise in this year's particular performance substantially. Now, the company indeed is a great opportunity for young investors, people who are investing for the first time, to buy into Match Group, and that is at a discount, as the company still has plenty of room to grow its revenue and profit over the next couple of years in the long term. Thus, even with a slight decline in the financials, as per, of course, their financial statements last year, analysts are very optimistic, with consensus price target of about $54, implying a 28% upside.
Okay, then our other one is Lovesac. This one is a specialty retailer when it comes to home furnishings, including modular sofas, blankets, accessories. Yeah, this company has grown in the recent years thanks to its good strategy. However, recent sales down in the main culprit behind Lovesac's valuation, plundering it by 71%, its peak. Though the company is expected to end 2023 with 9.15% revenue and 18% EPS growth in 2026. That is expected to accelerate to 16.3% and 59% respectively. They have a very outlook on this stock too, so the consensus price target should be $62. This implies an eye-watering 137% upside.
Wow, interesting. Now, if you're looking for something less risky, then PayPal is the company for you. We are looking at the top 7 growth stocks in the United States. Now, PayPal might be your best friend if you are looking for a less risky asset to invest in. Now, this leading digital payment platform needs no introduction and has been facing a lot of headwinds in the post-pandemic era. The slowdown of e-commerce and online transactions has caused PayPal's year-over-year figures to take a major hit, especially regarding the user accounts, which grew by just about 0.9% year-over-year in the first quarter of 2023. Regardless, we have put very strong hopes of recovery in this particular company, thanks to its strong network effects. PayPal's revenue growth remains very strong, and its strong profits have allowed it to launch in an aggressive share buyback campaign. It expects at least a repurchase of about $5 billion US in shares this year. Surely you won't be disappointed if at all you invest in PayPal on the United States market.
Okay, so looking at Block, or you could refer it to as SQ, it's another name among the cheap growth stocks that I think are worth buying before it recovers. The argument here is similar to PayPal, though, and I won't dive deep here, but you're getting higher sales and user growth at the cost of unprofitability at a higher premium. Personally, buying into PayPal and Block, is a good way to play the rebound. The price targets for both stocks are neck and neck.
Amazing. So those are the 7 top stocks we would recommend for the growth market. If you're looking at growth in the long term, you should be looking at some of these stocks. We've mentioned, of course, PayPal, Block, SQ. We've mentioned that's carparts.com. We've also mentioned BAC. We've also mentioned ChargePoint, rather. Those are some of the stocks that you should be looking at. Furthermore, let's get to look at the performance of the United States stocks just of recent. Stocks have made a little bit of noise during a holiday shortened session on Monday. And investors will return for a full day of trading this Wednesday today and focus still firmly on how the second half of 2023 will unfold.
Yeah, and stocks will be forgiven for expecting some bearish mean reversion in the months ahead. But after slicing and dicing the outsized returns from the second quarters, our work shows the tape clearing history with the bulls.
Looking back over the prior 95 years history of the S&P 500, in the last 61 years, returns in the first half have been very positive this year. In 28 years, or nearly half the time, the index posted double-digit percentage gains there, including this year, which saw at least the index rise by 16% in the first quarter to start the year. And these years, the second half returned on average about 6% within the win or rate of about 75%, and of course on average Sharpe ratio of about 0.87%, and of course the median return after these years was more than 9.7%. This week we of course look anxiously at what the stocks will end like, and today is a Wednesday, we're just midway through, and we hope definitely the United States market will stabilize. The debt ceiling talk is done now, and we are now focused on the rate hikes that have been of course now paused slightly. Now the stock continues to be about, of course, how the stocks will remain resilient, especially the technology stocks on NASDAQ, as well as the big stocks on S&P 500 and the 30 Dow Jones Industrial Average stocks. Thank you so much, and we are glad that you joined us this morning. Remember to follow us on Twitter at Smart24TV now, and of course you can get to give us feedback through our YouTube comment section on our YouTube channel. That's at Smart24TV, and get to like, of course, and subscribe to the channel for more of your latest content. Smart24TV continues to give you business And of course, more business news, more business updates coming ahead later on with UG Tukole, and of course, Skill Up and Jen Kolera, and a couple of other very intriguing programs on business. My name is Anthony, and I have been with
Nampi Juggler.
Yes, and we are Financial Markets. See you tomorrow. Have a lovely day. Bye for now.